Welcome to PhillipCapital's weekly market watch. My name is Lynette Tan, investment analyst from Phillip Futures. This week, we saw gold rallying to almost 1,700 per ounce, a level not seen in almost 6 months. This came as a result of reports that showed US manufacturing shrinking at its sharpest rate in more than 3 years this August, while US construction spending in July fell by the most in a year. Both reports came hot on the heels of stimulus-supportive comments from Federal Reserve Chairman Ben Bernanke at the annual Jackson Hole Symposium last week. The first 2 rounds of quantitative easing have doubled gold prices in the last 4 years. The Federal Reserve will meet again next week to discuss monetary policy. Investors may want to adopt a cautious approach before the meeting and the important US non-farm payrolls data due on Friday. After the gains this week, gold is likely to take a breather before the expectation for stimulus mounts again ahead of the policy meeting next week, especially if unemployment figures do not improve. Beyond the US, the likelihood of fresh action from the ECB to address the Eurozone debt crisis, coupled with the possibility of economic stimulus by the Chinese government, could spur further investments in gold. Investor appetite for both gold and silver has been strengthening, as evident from the increase in holdings of gold and silver-backed exchange-traded funds. The SPDR Gold Trust, the biggest gold ETF, reported its holdings rose to its loftiest level since mid-March. Speculative holdings of US silver futures in August staged their largest monthly increase since September 2009, according to data from the CFTC last week. The gold-silver ratio, which shows the number of ounces of silver needed to buy 1 ounce of gold, and acts as a gauge of the relative performance of both metals, fell on 4th September to its lowest level since late April. This was after silver rallied nearly 10% in the last 2 weeks, compared with gold's 3.5% gains. Traditionally, September is a month of strong performance for gold price. On average, over the last 44 years, gold has gained 2.1% in September, compared with March, historically the weakest month based on percentage gains, where it has averaged a loss of 0.5%. We are expecting gold to hit a new high in Q3 this year to challenge the $1,790 mark that it sought to breach earlier this year. That's all we have for today. Stay tuned to next week's Market Watch.